Hi, everybody. Welcome to Fire with Dr. Ninja Turtle. We are going to get started right away. The future of finance is here, and it's powered by AI. This video unveils the incredible potential of artificial intelligence in transforming personal financial services. And this will look at from the perspective of personalized finance because finance is personal. And so, what we're going to cover in this hour is we're going to discuss the rise of AI in finance, but we're also going to look at how it can be utilized by low income investors and also new investors. Because this channel is not all about, well, once you have $1 million, let's do this. Or once you're retired, let's do that. This channel is about helping people to get to financial freedom and get through financial freedom and enjoy the life that you designed. So what we're going to do is now, please share in the chat where you're tuning in from, right? And also, I'm going to start the poll, and I will make sure that I stop the poll towards the end of the live so that we can get the results. Last week, I did a poll for the first time, and I made the mistake of not stopping the poll until after the live was over. So this time, we're getting better every single week in these lives. So the poll question is, have you used any AI tools in your finance yet? And some people may answer, because I added this, as a never will. That's just how some people are. They just want to do things themselves and be DIY. And so, Wisconsin. I'm seeing Wisconsin here. See, I didn't think to ask where people were from, and now I'm learning. So let's get right into it, and let's talk about the rise of AI in finance. Most people don't realize that AI has been here for a long, long time because it's been in the background. You know, at your employer, you may have the option, and it may be the default option in your 401k, for the Target Retirement Date Fund. Now, I'm not a big fan of that, but I'm going to say that it works for a lot of people, because what it does is it automatically changes. All you have to do with a target date fund is tell it when you plan to retire. It will start off, if you're young, it will start off aggressively with mostly high growth stocks and equities. But then it will move you more towards bonds and safer as you get closer to retirement. I am in retirement and still using high growth funds and income funds, growth and income. And so that's because I don't need that money anytime soon. Now, I might have changed to bond funds if I needed that money sometime in the near future, but I don't. So I wanted to grow as much as possible for as long as possible. That's just my strategy. Well, a target date fund doesn't do that. But that is AI looking and just automatically changing your retirement allocation of your investments as you age. You don't have to do anything. All you have to do is put the money in there, and it will automatically make it more conservative as you get closer and closer to retirement. Another thing, and we'll talk about this again a little bit later, is tax loss harvesting. Now, in reality, that's for high net worth people, because certified financial planners use software that does that. And what it does is it looks at your portfolio, and then what it automatically does is at the end of the year, it sells your losses to offset your profits and your capital gains. However, we're going to talk about some apps here that do that for low income or new investors. Tiger on Fire, I see you there. Great to see you. He's got a fabulous channel. I just love his channel. He and his wife are both newly retired and going through what my wife and I went through when we first retired about 4 or 5 years ago. And so he's right where I was 4 or 5 years ago, although he's a lot younger, so he did it much better than I did. So the other thing that I wanted to talk about, and another example of this are robo-advisors, right? They use AI, and we're going to talk about robo-advisors in just a few moments, but they use AI. And so you might be with a robo-advisor and not realize that your finances are being helped by AI and being assisted by AI. Credit scoring is done with AI. Most everything in the financial world today is done with AI. So if you really want to keep up with it, then you need to learn and utilize it as much as you can. Because AI does not replace people. What it does is it becomes your assistant. And that's what you want. You want AI as your assistant. There are budgeting apps, and we're going to talk about those budgeting apps here in just a few minutes. Those use AI. You know, there are some apps on your phone that you can pay subscriptions for that will look at your bank account and they will tell you how much you spent in each category, and they will tell you if you're on budget or over budget. Now, again, those are subscriptions that you probably have to pay for. So I try to do it manually so that I don't have to pay out extra money, especially when I was a new investor who had almost no money and probably a negative net worth, just trying to get to zero, trying to get to a zero net worth. I could not afford to pay. And also, way back when I was younger, way back when, old guy here, we did not have all the tools that the folks have today. So please take advantage of the tools that you have today. So let's get right into these tools. So remember, the future of finance isn't just digital, it's intelligent. So these platforms that use AI to create personalized investment portfolios with minimal fees and no large minimum investments. That's one of the criteria here in this talk today, is that this is for new investors that have very little or low income investors who are just trying to get started in the market. So some of the robo-advisors are Fidelity Go, which has no advisory fee for balances under $25,000. Normally, you'll see an advisory fee under a certain amount of money, and then when you have a certain amount of money, then they take the fees down. But this, Fidelity Go, has no advisory fee, and that's a robo-advisor. SoFi Invest is a robo-advisor. Now, some of these, I will tell you, in these lives, I'm learning along with you. I have not used some of these, and I've not heard of some of these, but I want to bring them to your attention so that you can go and investigate them. Now, as you know, I have a free worksheet that I'll have linked in the description of this live, and it will have a list of all of these things that I'm talking about. So you don't have to write them all down as I'm going through them, because I'm getting ready to go through quite the list here. Another robo-advisor is Betterment. I have a friend who uses Betterment, and she loves it. So Betterment is a good one. I don't know if they have like a 2% fee. I don't know, but my point is I can't afford fees. That's just me personally, and that's why personal finance is personal. Wealthfront is another very well-known robo-advisor, and a lot of people use Wealthfront. So investigate all of these on your own. I'm not advising anyone, because I don't give financial advice, but I'm not advising anyone to pick any one of these. But my point is, do your own research. And it says that Wealthfront has low minimums of $500 and tax loss harvesting, which I mentioned earlier is typically with certified financial planners who may require that you have $250,000 in investments or more. Some have a $500,000 minimum before they'll take you on as a client. One place that I watch on the YouTube, they require $2 million before they'll take you on as a client. And that's what these folks do, is they have software that will look at all of your different investments and sell off the ones that are lost to offset the ones that make a profit. And I may not want that. And also, I don't have that kind of money. I have $2,000. So I'm not even close to anything that these people would want for a certified financial planner. I'm just not there. And we'll take questions towards the end. If anybody has questions, you can ask a question during the live, and maybe one of my friends that are in the live can answer your question. But I'll also take questions, if you have any for me, towards the end of the live. So let's talk about AI budgeting and investment apps. And these apps help users automate savings and invest without the need of deep financial knowledge. And one of these is Acorns. Now, Acorns I've heard about for many, many years, where it will round up your spare change and invest that for you. That is an excellent way for you to automate your savings and investing when you're new. Again, I've not used it because I just don't have the money, and I didn't have the money back when I was trying to do these things. But Acorn's been around for a long time, and a lot of people use it, and a lot of people really like it. So if you have a hard time saving, just save a little bit at a time, and that's what Acorns helps you to do. Stash. I've not heard of Stash, but Stash lets users start investing with as little as $5 and offers educational tools. And we're going to get into educational tools a little bit later. So stick with me on this. We're going through a few different things in this live, but we're going to go deep into some educational tools for new and low-income investors. So Qapital, which is spelled Qapital, uses a if then then that scenario to help you with your investing. And if you don't understand what that means, basically it's a flow chart. If I choose yes to this question, then it goes to the right. If I choose no to this question, then it goes to the left. And it just follows a flow chart of questions to, one, find out what is your risk tolerance and these different things in your investment, because risk tolerance is different for every person. Some people need to be able to sleep at night, so they just want conservative investments where they know they're not going to lose their money. Some of us need to grow our money as much as possible, like I'm talking about me, because we don't have a lot of money. And so we need our money to work as hard as possible. Does that mean we take on more risk? Yes. But again, I can sleep at night because I have other income that would offset any risk and losses that I may have. So you don't want to be doing this if you don't have some other backup, right? Now, a lot of people have an emergency fund. That is a good backup. I don't have a big emergency fund, but I have other streams of income. If you have YouTube as your other stream of income, you could take a little more risk in your investments if you want to grow your wealth faster. But some people just cannot sleep at night by doing that. So Cleo, which we're going to go really deep into a little bit later. Cleo is an AI chatbot that helps with budgeting and recommends ways to invest spare cash. And so I did a deep dive into Cleo and one of the other apps that I'm going to talk about here in just a moment, and we're going to get to that as we progress through this live. And so I see that Tiger on Fire has said, I have only used Fidelity for my investments. See, I had Fidelity, and I've recommended Fidelity to family and friends because Fidelity has 4 funds that have a 0% charge. And that's what they call a loss leader. When a company does something for 0%, they're just trying to get people through the door, which is fabulous. I did it for my mother, I did it for my aunt, I did it for my brother. I got them all into Fidelity because it's a 0% fee on their investment. So all of their money is being invested. Now, I will say I did not know about Fidelity Go. I just went into one of their 4 free mutual funds. So look those up on Fidelity if you want to invest in a mutual fund with 0 fee. So there are platforms that allow fractional investing. One of the reasons that I moved from Charles Schwab to Vanguard is because it allowed me for more fractional investing than Schwab did. I was into different Vanguard funds, but Schwab said you have to buy the entire amount. Let's say that fund costs $50 to invest in it for a share of that fund. They said I had to have the whole $50. Well, when I moved to Vanguard with that same fund, I could put in $1, I could put in $2. And what I do is I take the extra odd number of dollars that I have, like let's say I have $51.32 in my account. I will take the $1.32 just to even out my account, and that's how I gamify my investing. And I put that $1.32 either into the investment or into my savings account from my checking account, so that I'm building up my savings account and my emergency fund. So for me personally, I have to gamify what I'm doing. And so fractional investment platforms, they allow investors to buy pieces of expensive assets using AI curated suggestions. Now, two of these are public.com, where you can buy fractional shares with no commission, and it also includes social investing tools. And if you have not heard of social investing tools, you can invest in things that align with your social beliefs. For example, some people do not believe in tobacco stocks. They don't want to support people smoking. Some people do not want to support people gambling. So they do not want to invest in any stocks that have to do with casinos in Las Vegas or anywhere else where they have casinos. So these are social things. For example, if you like the environment and you want to go green, you can invest in eco-friendly companies that align with your beliefs. And I love that because everybody should be able to invest in what works best for them, not what just some big broad market. I may be in the S&P 500. I don't know the top 500 companies. Some of those may be companies, for example, that sell guns, right? And I may not want to be supporting a company that sells guns. So you could use public.com and do your social investing. Robinhood is another one. We've all heard of Robinhood. It's pretty popular out there. And you can do fractional investing, zero commission trades, and it has AI enhanced analytics. So if you really want to go deep into how your investments are performing against, let's say, a portfolio of a different type, right? I may have a conservative portfolio, you may have an aggressive portfolio. You can compare how those two work. A friend of mine, I helped him invest with Fidelity recently, and he put some of his money into aggressive growth, and he put some of it into a balanced fund. And the balanced fund is like mid-term. You know, we talk about buckets. You have your long-term bucket, you have your medium-term bucket, and then you may have your cash reserve bucket for immediate emergencies. Well, he invested in some of his money into the long-term 5 or 10 year not touching bucket, aggressive growth. Then he put some into a Fidelity balanced fund. And so he just leaves that money there. That money is for 1 to 3 years. He might need that money. So you may want to do something like that, and you could do that with Robinhood. So now let's talk about, because we're going to get into this, about the AI financial education and coaching. And I mentioned Cleo a little bit earlier, and we're going to get back into Cleo, but it also fits in this category, even though I mentioned it in a different category, AI financial and educational coaching. And this is very important for new investors and low-income investors. And I'm just going to read real quick that Tiger says that he likes to add something Oh, he wants to add worthy bonds. Allows you to buy bonds and make a little bit of money as well. I've never heard of worthy bonds. And this is why we're all in here teaching each other. None of us here are experts. We are all trying to grow our finances. I'm still learning. And I am always learning. I watch YouTube certified financial planners every day, every day. And I'll tell you real quick, side story, going off to the left here, that I heard a financial planner talk about what happens after a person passes away with a health savings account. I had never heard that before. And I learned something new and then had to make sure that my wife had access to all the receipts of my health savings account. I didn't know. She didn't have access. She'd have to come into my computer and try and find them somewhere in there. But a wife can use, or a husband, spouse, can use your receipts from your health savings account to get tax-free money after you pass away. I heard that on YouTube, recently learned that. And so thank you, Tiger on Fire, there you go, for the worthy bonds. And I'm going to have to look up worthy bonds. Everybody look that up. And because I'm not a big bond investor, but a lot of people are. And I don't want to exclude anyone on my YouTube lives because personal finance is personal. So let's go back to our financial education and coaching tools for new investors and low income investors. So these tools offer simplified explanations of investing and often via chatbot. So there's Zogo. And Zogo, we are going to go into later as I go into a deeper dive of one of these educational tools. But it gamifies financial literacy and offers rewards. And one of the things that I read just before the live is that they used to offer rewards for free. Now you have to have their subscription level service in order to get the rewards. And I'll go into that a little bit later. FinChat.io. It lets users ask financial questions to AI using real market data. See, I was not aware of that one. And that's the thing about my lives, is I'm not here to tell you I know everything. I'm here to learn right alongside you. And that's why I'm glad that Tiger on Fire is here, because he's adding weight and depth to this discussion. And I want everybody chime in if you're using AI, if you've used AI in your finances, or if you're just getting started in your finances. And don't forget to answer the poll that I have up there, because I'm going to stop the poll and give us our results before I close this live. So the third and last financial and educational coaching tool that I'm going to mention is Eva by Even. And again, I'll have all of these listed in the downloadable worksheet that's listed in the description. So you don't have to write down all of these names during this live, and you don't have to rewatch this live. Although I hope if you're watching this on the replay that you rewatch the live. But you don't have to rewatch this live if you were here live to see this list of items again, because I made sure to put this list that I'm mentioning in the worksheet that's free to download through a link in my description. So Eva by Even. It's AI budgeting and saving app targeting at hourly and low income workers. Now, how cool is that? Because a lot of people are hourly or low income workers. And so try Eva by Even, do your own research, but look it up as something that would help you in this using AI tools. There you go. Lost myself for a second there. So don't fear AI. Learn it, use it, master it. So what we've covered so far are robo-advisors. We've covered AI-powered budgeting and investment apps. We've covered fractional investment platforms. And we've covered AI, financial, and educational coaching. And Life with T says, I was the same, systematic. You can start very small and it becomes easier along the way. But also do your research. That's what she's saying. And that's what I'm saying is on any of these things that I'm talking about on my live, do your research. Because what works for me may not work for you. So there are different people, and Happy on Monday is here. Hi, Julie. She's here, and she does the 3-bucket strategy. And I do the 3-bucket strategy via my rental properties. So I don't have a lot of money in the stock market where I have a long-term bucket, a medium-term bucket, and short-term cash. I don't have that. What I have in my long-term bucket is my real estate. My medium-term bucket is my teaching that I do as a side hustle. My cash is my pension that comes in every month. So everybody has their own 3-bucket strategy. And so you should figure out your own long-term, mid-term, and short-term way of investing and saving for your future. Because this channel is all about build your financial future, build it on stability so that you can retire early. I love early retirement. I'm having a blast in early retirement, and I could never ever imagine going back to a 9 to 5. So let's talk about tips for new and low income investors using AI. So start small, right? T just said that, and that was a tip right here. Look for tools with no minimums, there you go, not minimal, no minimums, and fractional investing. And I talked about my fractional investing that I do with Vanguard. I am not suggesting that anybody move to Vanguard. The only reason I did that was because, long story, okay, Daryl's going off on the side tangent again. Backstory. I signed up with TD Ameritrade many years ago and only had $50 or $100 in there because I wanted to try out the stock market. Well, TD Ameritrade was bought by Charles Schwab because they wanted one of their tools. So Charles Schwab bought TD Ameritrade, which moved me to Charles Schwab. So I was in Charles Schwab for a while, but I was buying Vanguard funds within Charles Schwab. So what I decided to do was just move to Vanguard so that I do not have to buy the whole $200 price of that fund. I didn't have $200. So I could only buy one once, I don't know, every 6 months or something. I'm not a big investor. So when I moved to Vanguard, it allowed me to buy that fund by putting $5 more in, $5 more in, $5, and I only get 0.01% of that fund with every little purchase. However, it's commission free and I do small. That's just how I roll. And so again, the tips start small. Then automate savings. Apps like Acorn and Qapital, which I spelled Qapital, because I don't know if I'm pronouncing it correctly, makes investing feel effortless. If anything you can do to relieve decision fatigue, and decision fatigue is where your brain has to spend time and waste time making all these various different decisions. And so a lot of people, you'll hear about these billionaires that wear the same color t-shirt every single day. That's one less decision they have to make running these multi-billion-dollar corporations. So automate your investing so that every single payday, or if you're on a pension like me, every single time you get your pension, you put away $5. You put away $10. This does not have to be, I put away $1,000 every time I get paid. Yes, you want to work your way up to that as you get pay raises, right? And T mentioned this in a recent video, that she received a pay raise and she put that money towards her retirement. I did that when I got to the point of being able to afford to do that. But when I started out, it was just like I said, take the extra $1.32 and move that from checking over to savings. And that's my way of playing the game. It works for me because it's a very small amount of money that I won't miss. And one of the things about raising your savings rate is if you do it gradually. Some people say raise it 1% a year. And so if you do it 1% a year, you won't miss it. If you're putting away an extra $50, you won't miss it over time. And that's what works for me, and that's how I invest. So another item that's a tip is learn first, right? Use AI financial education like Zogo and Cleo, which we're going to go into more deeply here in just a moment, to avoid common beginner mistakes. And so one of my common beginner mistakes that I made was listening to other people and investing in what they told me were the hot investment items, right? When you're chasing the hot stock of the day, right? For the last couple of years, NVIDIA has been the hot stock of the day. And people were jumping in and jumping out, jumping in and jumping out. Me, no. I learned my lesson that, like Warren Buffett says, invest in things that you understand. Also, invest in things that you use. If you use Kellogg's cereal every morning for you and your children, invest in Kellogg. You're already using their product, right? Now, that was not investment advice. I'm just telling you what I learned from Warren Buffett, right? So what did I do? I own one stock of Walmart. There you go, because I go to Walmart in my local little town here. So I finally took my own advice, and I own one share of Walmart. Avoid fees. As I mentioned, Fidelity has 4 funds that are 0% fee. And so that's why I got my family and friends to go into those 0 fee funds, because they don't have a whole lot of money and they can't afford for fees. There are calculators on the internet. I should put this in one of my videos, but and maybe in a video. I may have a video on this. There are calculators that show you how much a fee in a fund will cost you over a 20-year or 30-year investing period. It's staggering. It's staggering how much money these fees actually remove. For example, it could be up to $200,000 over a 30-year period of time that you could have in your investing account that could have been compounding to make you another 300, 400,000. So it's fees are serious. There are relevant fees. I'm not saying that don't do anything ever that has fees. What I'm saying is know what the fees are and know what value they bring. So sometimes paying a fee is worth it. It is. Sometimes it is. Just it doesn't work for me. And so I wouldn't recommend it to any of my friends who are on low income or have a little bit of money to invest and they don't have time or money to lose towards fees. So now we're going to go into comparing Zogo and Cleo, which are 2 apps that you can use to not only learn investing, but also help you save and begin to invest as a new investor or a low income investor. So good. We have people in the chat. So I really appreciate that. I appreciate everybody showing up. You guys do not have to show up at these lives. I mean, I'm going to sit here and talk no matter what. So let's talk about Zogo first. We talked about how it gamifies learning and gaining financial literacy, right? I love games. Although I'm not a video gamer, but I love games. I love to make things fun. And if investing is not fun and saving is not fun, it's hard to do. So the purpose of Zogo is to teach users the basics of personal finance and investing in a fun, bite-sized way. And if you're a new investor or a low-income investor and you can't afford to lose the little bit of money that you're starting with, then this is a good app. But again, investigate this and compare it with Cleo. And when you're just starting investing, it's like the train leaving the station. I use this analogy all the time. The train has to get up to speed, but at first, that engine is chugging and chugging and chugging. That's investing. You have to get it to where that train is going 50, 80, 90 miles an hour, but it didn't start out that way, right? It's going uphill. But when it starts going downhill and you have some money invested, and some people say that's $10,000, other people say it's $100,000. When you get to critical mass of some point, then your money starts working harder than you can. And that's where I'm trying to get to. I want my investments to work harder than me. And when your assets can pay for your liabilities, then you're financially free. And that's where we're trying to get to. But here's where you start. And so how Zogo works, it has many lessons. Users complete short, interactive lessons. They call them pineapples, on topics like budgeting, credit, investing, and a lot of other items. So this is a very bite-sized way, and it's free. Again, these things are free. I'm bringing you free items. So I'm not saying go out and pay for the subscription level service of this. Get the free service and keep it moving. So it's gamified learning. You earn points and rewards, sometimes even gift cards, for completing lessons. And I'll get into that a little bit later because I mentioned that you may not get the gift cards with the free level of subscription. Simple explanations. Everything is explained in everyday language. And you do not need a finance degree to go through this free course. It's beginner focused. It helps you understand what investing means, how the stock market works, and why long-term thinking matters. And we'll talk right about that for a second. You have to think long-term. The stock market is going to go up and down daily, weekly, monthly, yearly. Some years it's going to go up and down. Like when COVID first happened in that March of 2022, I'm not sure what year. But anyway, that March, maybe 2021. Anyway, that March, the stock market dropped. It tanked in March, but it popped right back up. That doesn't always happen. Most people will sell when it tanks. You have to have the long-term plan of no matter what the stock market does, I'm not touching this money for 5 years, 10 years, 15 years. So then it doesn't matter what it did in 1 day, 1 week, 1 month, 1 year. Doesn't matter. Look at it in 15 years and see how it's grown. And it's the same with my real estate. It's no different than the stock market. When I first buy rentals, I'm not looking to make money from day one. Some landlords do. Some landlords will not buy a rental property unless it cash flows from day one. And that's fine. That's them. I buy rentals that I know I'm not going to see a profit for 1, 2, or 3 years. However, once that profit shows up, it's going to be there for the next 15, 20 years. And I will also have appreciation of that property, which would allow me to have equity to buy more properties. You have to have that long-term plan. So now, why is Zogo great for investors and new investors particularly? It reduces fear by building confidence through education. And I will tell you, I got more and more confidence as I got one college degree and then my second college degree because I only wanted to pass one class. See, I wasn't planning on getting a college degree. but I had more confidence with each college degree that I obtained. It's free to use. That's what I'm bringing you today, are these free apps that are free to use. And I'm talking about Zogo and Cleo. And so it prepares users to use more advanced tools like robo-advisors or investing apps. And it's once you understand the basics. And I had a person on Wednesday on my live who said that they were going to email me, and I haven't heard from the person yet, but they just wanted help just getting started with the basics. And I can help you with that. I help people in my community once a month at my local library with just the basics. Now, what will I do after this live is I will take Zogo and Cleo to the local library and show this to my new investors, because some of them are younger and they may be more comfortable using these apps to learn, as opposed to the free Excel Google sheet that I talked about on Wednesday that's free, and you just track your income and your expenses. That's how we all start. Just track your income and expenses. So now let's look at Cleo. And Cleo is an AI chatbot for budgeting, saving, and spending smarter. The purpose of Cleo is to act as a friendly AI financial coach, especially for people living paycheck to paycheck, which we talked about already, and or new to money management. And I've been doing money management, my own personal money management, for many, many years, and I'm still new to money management. As you've seen, I'm still learning even today. There's one thing that I always say, which is always be learning, no matter what. The one thing that they taught me when I got my PhD was, now you know how much you do not know. And that's the truth in life. Always be learning. So how does Cleo work? Well, it's like texting a smart money friend. You ask Cleo questions. Can I afford this? Or how much can I save this month? And it will give you great answers, all based from AI. So it's got budgeting help. Cleo tracks your spending, shows you what you're wasting money on, and helps you set goals. Having goals is critical. You have to set a savings goal, and I tell people, set a time limit on your goals. Don't just say, I want to save so much money this year. No, by March, I am going to save X number of dollars. Well, your throat really gets parched doing a live. Auto saving. Cleo can analyze your cash flow and automatically save small amounts for you. It's perfect for micro investors. And that's me, as you can tell. I'm in my 60s and I only have $2,000 in the stock market. So I'm a micro investor. I'm getting there. I'm trying to change and balance and move more of my assets from real estate, not that I'm selling anything, but to start taking some of my cash flow and use that to build up my stock market portfolio. So I'm finally at that point where I'm going to be more in the stock market and have more of a balanced portfolio than just mostly real estate. So roast or hype mode. You can choose how AI speaks to you, playful and encouraging, or sassy and blunt. Some people need somebody to get in their face. That's not me. I'm not that kind of guy. I'm not a get in my face kind of person. I don't like people to get in my face. I would take the playful and encouraging mode. That's what I would choose in that app. But again, you can personalize it to what works best for you and really motivates you to keep going in your savings. And so why is Cleo good for new and low-income investors? It teaches financial habits like saving and tracking before investing. Remember, I said you have to know what's coming in and going out. That's the first step. After that, you can look at the difference between what's coming in and going out. I call that the gap. You want to widen the gap between what's coming in and what's going out, so that you have more and more coming in than you have going out. Those are decisions that you make early on, and they're small decisions. Then you can start investing what's in the gap. Yes, you might save an emergency fund first from what's in the gap, but then you start investing what's in the gap once you have either a small emergency fund or a fully funded emergency fund. All of that is personal. So it offers tools like Cleo Save to put money aside gradually, a first step before investing in the market. And I think I mentioned that. So now let's go to a comparison between Cleo and Zogo, because I mentioned their benefits and everything, but I mentioned them separately. So now I just want to go head to head and just give you a really quick comparison. So the main focus of Zogo is financial literacy, basically investing 101. The main focus of Cleo is budgeting, saving, and cash flow. So you may have different goals. So you may use both of these tools or one of these tools, or whichever one you feel is more appropriate to you. And so the Fam Adventure says, savings is a marathon, not a sprint. I love that, and I agree with that. You know, my whole financial literacy career has been a marathon, and I'm still learning today. My saving and let's just say I started in my 40s, so only maybe 20 years now of really being serious. But in my 40s, I had nothing. I started with nothing. So I started with all these micro investments. And so in my 60s, I built up that critical mass. I've got that train heading down the hill where it's picking up speed. And my assets are working harder than I can at this point. So the learning style is Zogo gamified lessons and quizzes. Cleo has an AI chatbot with real-time advice. Zogo is best for teens, students, and beginners. Cleo is best for low-income earners and gig workers. So if you're out here on YouTube, or you're driving DoorDash, or any of these, Uber maybe is another gig job. Gig workers, Cleo might be best for you. Zogo, where AI is concerned, it gives lesson suggestions and has rewards. Cleo has personalized budgeting and chat interaction, and that's where the AI really comes into play. So let's talk about the cost, right? Zogo is free, but it may offer in-app rewards. And so that's something that you're going to have to check into. Cleo is free, but it has an optional paid feature. It says $5.99 a month. But don't hold me to that, because it could change, and we don't know when people are going to see this live. So, but you get Cleo Plus perks. And so you'll have to look into what those perks are. But let's look at this cost comparison table. So Zogo is free for learning only. Cleo is free for basic budgeting and chat AI. So in order to redeem the quiz points, it requires the premium for Zogo. And I mentioned that a little bit earlier, that I was reading this, that they used to offer the redeeming quiz points and rewards in their free version, but they have since changed that over time. And Cleo doesn't have anything like educational quizzes. let's see, high yield savings. Zogo does not have high yield savings accounts, does not offer cash advances, and does not have credit building tools. So Zogo is not good for those. And I'm going to say don't do a cash advance. That is financial advice. No, it's not. So we don't give it financial advice on here. But I personally would never use a cash advance. Did I do this when I was 20 years old and in the Army? Absolutely. I went to the pawn shop with my stereo equipment every month to pawn my stereo equipment to pay my bills when I was in the Army. Okay? So now you guys know a little bit more about how ignorant I was at that time. And that's not to say that you can't learn from your past mistakes. And so let's talk about Cleo as far as a high yield savings account, cash advances, and credit building tools. Cleo has available with Cleo Grow and Plus Builder. That's a high yield savings account with Cleo. It has cash advances available via their Plus system where you're paying a subscription of the $5.99 a month, or they have a builder fee level tier that is $14.99 a month. Would I pay either of those? Of course, you guys know my answer to that. Everybody put my answer to that in the chat, please. So now their credit building tools. Cleo has a credit building tool, and it's under their $14.99 a month builder plan. I would never pay anybody to build my credit. I just do it by paying everything on time and trying to lower the percentage of what I have outstanding in credit. I try to keep it below 10% of my credit line. And that works for me. So we have covered the following topics. And again, they're listed in the Word file, and it's a Google Word file, so it's a Google Doc, that I have listed and linked in the description below. All of these different tools that I've listed. So we've talked about robo-advisors, we've talked about AI-powered budgeting and investment apps, we've talked about fractional sharing platforms, we've talked about AI and educational coaching, and then we went into detail and compared Zogo and Cleo, so that you should have some good idea of which one may work best for you. And so we also went into tips for new investors and low-income investors. So what I'm going to do at this point is I'm going to stop the poll, and we're going to see what our results are. So we're going to end the poll. And I do not know what happened to my poll. See how new I am at doing lives? I ended the poll, and hopefully you can see the poll over there. So let's see. Has anyone in the chat used any of the items that I've talked about? And did you find the information for your low-income investors of any value? Here's our poll results. It popped up after a few seconds. And it says, have you used AI to manage your money yet? And the results are 71% said not yet, 14% are using it, and 14% never will. See, I wanted to add that never will in there because some people never will. But I love that 71% have said that they have not used it yet, meaning that hopefully I'm bringing some amount of value. So let me know in the chat if this live was of any value, because that's my goal, is to bring value in personal finance. So do we have any questions? Oh, good. I'm glad that you guys saw the poll. It took a few seconds for it to come up in my studio because this is the first time I've successfully done a poll and stopped the poll during the live. Every week, I'm getting better and better at these lives, which is how we're doing our investing. Every week or every month, we get better and better. With every paycheck, we get better and better. Well, thank you, Julie. Thank you so much. Julie from Happy on Monday says that your lives are always of value. And her videos are always of value, so I make sure I try to be there when they drop. Now, Julie has taught me consistency. She has a specific time, twice a week, where she drops her videos. This is my specific time to do my live. 10:15 a.m. Central Standard Time every single Friday, no matter what. I will be sitting here doing my live. So, because I love consistency. I have consistency in my personal investing. I have consistency in my routine of grading my students. I have consistency in doing my lives. It works for me. So I'm looking to see if we have any connections, if we have any questions. And so far I don't see any. So again, I'm going to mention the things that we've covered, just in case someone came in late, that we've covered robo-advisors, AI-powered budgeting and investments, fractional investment platforms, AI financial education and tools and tips for investing for new and low-income investors. And so I'm now checking the chat because we have just a few more minutes left in this live. And as I mentioned last Friday, we start on time, we end on time. And I was taught that you don't let it run over, you don't let it go long, you start on time, you end on time, because people have lives. Just like I have a life. I have things to go and do after the live, you have things to go and do after the live. So, oh, thank you, T. Thank you. And so what I want to share is that fire isn't about quitting life. It's about lighting it on fire on your own terms. So remember, never let your past determine your future. Thank you everybody for coming to my live. We're ending a couple of minutes early because I've run out of time. So there you go. I want everybody to have a fabulous day. I will be back here next Friday at 10:15 a.m. Central Standard Time. Thank you all so much. See y'all later.